What's up everyone, it's Caddy with Money Vesting. In this video, I wanted to discuss a brand new breadth thrust indicator, which is the Zweig breadth thrust indicators, which is just suggesting that the markets here over the next 1 year is going to be substantially higher than where we are right now. So I hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. The first week of the month is the best time to join. Happy Easter to everybody. Hope you all had a fantastic long weekend. And the link to our fundamental and technical analysis courses, the bundle currently is still 60% off. Coupon code is going to be Easter if you still want to take advantage of that sale. So Ryan Detrick on Twitter pretty much suggested that the extremely rare Zweig breadth thrust indicator just triggered, and it has only happened 14 other times since 1950s, and the S&P 500 was higher a year later every single time, up more than 23% on average a year later as well. So a little bit about the breadth thrust here. The breadth thrust indicator, which is definitely a mouthful, is a market momentum indicator. It was developed by Dr. Martin Zweig, and the breadth thrust indicator calculated dividing a 10-day exponential moving average, so 10-day EMA of the number of advancing shares by the number of advancing plus declining shares. So the formula is simply taking into account the advancing number of shares and then dividing it by advancing plus declining, and then you plot a line, and then using that line you get to a 10-day moving average, exponential moving average. So it's quite a bit of a process, and the breadth thrust occurs when during a 10-day period a breadth thrust indicator rises from below 40% to above 61.5%. So those are some of the readings as to when that happens. And when it does, markets are most certainly in the last several decades have been higher on average with not a single false positive. A thrust indicator that the stock market has rapidly changed from an oversold condition to a one of strength, but has not yet become overbought. Because if you think about it logically, what is the indicator really telling us? It's telling us that the markets are shifting right underneath. There's a lot of breadth behind this move that we're seeing in the market, and we are pushing to the upside with oversold to overbought conditions, and there are more stocks now moving back to the upside as the indicator itself is moving from below 40% to well over 61.5%, as there are more advancing stocks in the New York Stock Exchange. According to Dr. Zweig, there have only been 14 breadth thrust indicators since 1945, which is also what Ryan mentions here. And the average gain following these 14 thrusts was 24.6% in an average time frame of 11 months. And Dr. Zweig also points out that most bull markets begin with a breadth thrust indicator as well. So 1945 is actually quite a long time ago, and it's only happened 14 times. It's crazy. This right here is what it looks like. So the following chart shows the S&P 500 and the breadth thrust indicator. And what you'll notice is that it pretty much went from 40 to as much as 61.5% in a span of 10 days. It's really important to understand that because we are going to be using a 10-day exponential moving average. And you'll notice that the S&P 500 ended up obviously rallying quite a bit. I believe this is from back, long time ago, because I see the S&P 500 values are substantially lower. So, but the bottom line is that this has been a indicator that's been widely used in the technical analysis world, or at least looked at as one of the indicators. And horizontal lines are drawn on the breadth thrust indicator at 40% and 61.5%. So that's the move that we're seeing to the upside. Remember that a thrust occurs when indicator moves from below 40% to above 61.5% during a 10-day period. On December 18, 1984, I wrote the following comment regarding the breadth thrust indicator in a software manual. And this was from another report online. And they mentioned that at the time of this discussion, the breadth thrust is happening. And New York Stock Exchange has gained only 1.6% since the thrust. If the market fails to go higher in the next 6 to 12 months, it will be the first false signal generated by the breadth thrust indicator in 39 years. This was back in 1984. With the historical average gains of almost 25%, we feel the odds are in our favor when we go with the thrust. So trust the thrust is what they are talking about. As shown in the example, NYC did go up higher after the thrust indicator was triggered in the ensuing months, and 12 months later the thrust occurred. The market was up 21.6%, and 2 years later, or 21 months later, the market was up a whopping 51%. So I did add this indicator, and again, it seems a little bit of a different indicator. Maybe you don't have the values correct, but I do have the 10 moving average, exponential moving average over here. I've got it on New York Stock Exchange. We got a buy-in entry of 0.4. which is the 40% level. And I'm also partial closed using indicator Zweig. Let's just try this one. And that's it. That's what I'm seeing right now. And this is the 10-day period, which I believe a lot of people are referring to in this report. And of course, Ryan Detrick on Twitter as well from March 14th, or you can see that from March 23rd all the way till March 31st. So that's a 7 to 8 day period when we actually saw that thrust indicator pretty much get triggered, go from 0.4 to as much as 0.64. It did happen over here as well, but it did take a longer time. So you can see that from 0.4 down below here, it took us from December 28th to January 11th. So it took us more than 10 days to get up to that level. So maybe it doesn't trigger at that point. Again, I'm also learning this indicator today. So maybe it doesn't trigger because it took a little bit over 10 days. But this right here was a clean shot up, to the upside of 52%, going from 0.4 to 0.65, which are the two thresholds that we are talking about. And again, in the past, it has been triggered only 14 times, although it has swung back and forth between below 40% and above 61%. But the key takeaway there is to happen in a 10-day period. So we'll find out, what the market's going to look like over the next 12 months here, because again, they're suggesting that the average gain, 1 month average gain is 5.4%, 3-month returns 8.3, 6 months 17.2, and 12-month return following this thrust in indicator is 23.3%. So time will tell, of course, if this is going to be correct now. Another thing that I wanted to point out is that Gunjan Banerjee also tweeted on Twitter saying that the S&P 500, this is pretty much a quote from Citigroup, saying that S&P 500 market cap is up so far in 2023, but 92% of that gain or that rise has come from just 7 large cap companies, large cap stocks, and Apple has accounted for nearly a quarter of it. That's 25% of those gains coming from Apple alone. So we talked about concentration risk, and it also speaks a little bit to the market breadth behind this right now. We're not really seeing a broad-based rally, but instead just a handful of names, 7 stocks. We got Nvidia, we got Tesla, Apple, Microsoft, Google, all these big companies, large cap tech is the one that's driving the markets higher. So it's going to get really interesting from here on out, whether we continue to see the markets push up, or if you see that concentration risk start to kind of wobble a little bit, as there's not a lot of broad-based rallies that we're seeing in the markets underneath. The breadth still seems a bit weak, but the thrust indicator is suggesting otherwise. So just wanted to present this to you guys. Let me know your thoughts down in the comment section below. What do you think the markets are? Where do you think the markets are going to be a year from now? That's the real question here. Let me know in the comment section down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing, and I'll see you all in the next video.